Welcome to TalkTickers. We're the show that cuts right through the earnings call noise to give you, well, the essence of what really matters.
That's the plan.
Today, we're taking a deep dive into ServiceNow's second quarter 2025 earnings call. Our mission, like always, is to pull out the most important nuggets for you, the what happened, and crucially, the why it matters, especially for those of you navigating the investment landscape. Get ready, because it looks like another really insightful look at a company that just keeps pushing forward.
That's right. And, for anyone making informed investment decisions, really getting inside these calls, it's more than just the headline numbers, isn't it? It's about understanding the strategy, the shifts, the market dynamics behind those results. So yeah, we're here to give you a precise, actionable breakdown, peel back some layers.
Okay, so let's jump straight into those headline numbers then, because what jumped out immediately was just an incredibly strong performance right across the board. ServiceNow didn't just meet expectations for Q2 2025, they significantly beat them, delivering what you can really only call spectacular results. Their subscription revenue growth, for example, hit 21.5% year over year in constant currency. That came in at $3.113 billion.
Right.
And that's a full 200 basis points, 2 full percentage points above their own guidance, which is pretty significant.
Yeah, and the strength wasn't just, confined to revenue. Their current remaining performance obligations, or CRPO as we call it.
Yeah.
That also saw really robust growth. It increased by, get this, 21.5% year over year in constant currency too.
Wow, exactly matching the revenue beat.
Exactly.
Yeah.
Another impressive 200 basis point beat versus their guidance. That pushed CRPO up to $10.92 billion. And what's truly, I think, fascinating here is the consistency.
Right.
This kind of outperformance, it isn't just a single good quarter. It's just something more fundamental, a robust business model where operational leverage is really kicking in. That sets them apart, I think, from a lot of peers who are still grappling with the cost of integrating things like AI.
Absolutely. And you see that operational efficiency reflected so clearly in their profitability numbers. Their operating margin for the quarter was an impressive 29.5%.
Yeah.
Which is over 250 basis points, so 2.5 percentage points above what they guided for.
Huge beat there.
And then when you look at free cash flow margin, that also saw a solid jump. It reached 16.5%, and that's up 300 basis points year over year. These aren't just like isolated beats. They really speak to a deeply ingrained financial discipline, wouldn't you say?
I would indeed. And beyond just the raw financials, these numbers really underscore ServiceNow's role within their customer base. It's becoming more critical, more sticky. They reported a robust 98% renewal rate. Now, that isn't just a statistic, right?
Right.
It's a clear signal. Exceptional customer satisfaction, deep strategic importance of their platform. Customers aren't leaving. And when it comes to landing significant new business, the volume of large deals was particularly impressive. They closed 89 deals with over $1 million in net new ACV, that's annual contract value.
89.
Wow. Yeah. And remarkably, 11 of those deals actually exceeded $5 million in ACV. So this clearly shows a consistent ability not just to land new clients, but also to significantly deepen relationships with those big established enterprises.
And they're definitely succeeding at expanding within those really valuable accounts. The growth in their largest customers is especially notable. They now have 528 customers generating over $5 million in ACV.
Mm-hmm.
And even more impressively, the number of customers contributing $20 million or more in ACV, that increased by over 30% year over year.
30%.
Yeah, that's a powerful sign that their biggest clients are really finding more and more value, expanding their commitment to the platform. Okay, let's unpack this a bit further then. Moving beyond those, impressive raw numbers, the strategic drivers behind this performance, it seems overwhelmingly influenced by that omnipresent theme, AI, artificial intelligence. What particularly stood out to me from the call was the impact of their Now Assist products and their broader innovation initiatives. They explicitly said Now Assist keeps outperforming expectations, net new ACV beating once again. But what's actually driving this adoption? Why so fast?
Yeah, this is where it gets really interesting because it's beyond just simple adoption. It's about deep integration. The AI Pro Plus deal count, and this spans critical areas like ITSM, CSM, HR, that was up over 50% quarter on quarter.
50% just in one quarter.
Just in one quarter. Right. And to give you a sense of the scale we're talking about, they even closed their largest Now Assist deal ever, a monumental contract, over $20 million.
$20 million for one AI deal.
Right. So this isn't some pilot program stuff. This shows a clear acceleration in enterprise AI adoption. A serious commitment from customers.
And it's not just those flagship Now Assist deals, right? They're Plus SKUs, stock keeping units, the enhanced bundles with AI baked in. They're also doing exceptionally well.
Oh, absolutely. Take IT Asset Management Now Assist, for example. Its net new ACV surged nearly 6 times quarter over quarter.
6 times.
6 times. And the average deal size is more than tripled. We also heard Now Assist for SecOps and Risk. That more than doubled its net new ACV. And the deal volume for the ITSM Plus and CSM Plus bundles quadrupled year over year. So it really illustrates how AI isn't just some add-on feature. It's deeply permeating and enhancing all their core offerings, making them more powerful, more valuable.
Okay, so how are they thinking about this? How are they framing this evolution?
Well, a key takeaway here is how they're conceptualizing it. They're emphatically stating that AI is the new UI, the new user interface. They're positioning themselves as the extensible AI operating system for the agentic enterprise.
Agentic enterprise. What does that mean exactly?
Yeah, it's not just a catchy phrase. It represents a fundamental shift, they believe, in how businesses will interact with technology. Think of it like this. Instead of a human always clicking buttons or navigating menus, an agentic enterprise is one where AI agents, these specialized pieces of AI that can act autonomously or semi-autonomously, they're proactively completing tasks, streamlining workflows across the entire organization. And their differentiated approach here is critical. They see AI work as inherently cross-functional. It has to be, integrating the entire tech stack, any cloud, any data source, any LLM, any agent, into one single cohesive model for workflow and AI execution.
That sounds like an incredibly powerful integration play, almost like a central nervous system for enterprise AI.
Kind of, yeah. And it's not just about managing their own agents. They introduced this AI control tower concept. It's specifically designed to manage both ServiceNow's own AI agents and third-party agents, all across an entire enterprise.
So managing the whole ecosystem.
Exactly. And get this control tower solution, it surpassed its initial full-year ACV expectations in just 60 days from launch.
60 days. Wow, that's incredibly fast adoption. Shows a real need out there.
It absolutely speaks to the immediate pain point. Enterprises are facing scattered, unmanaged AI tools everywhere. They need to bring order to that chaos. And to further solidify this foundation for the agentic AI era, they also acquired data.world.
Right, I saw that, for data governance.
Precisely. Crucial data governance capabilities built on a knowledge graph. This is essential for managing the sheer complexity and diversity of data in an AI-driven world, ensures agents get reliable, governed info, and to accelerate customer AI adoption even further, they've launched this now Next AI program, basically deploying dedicated engineering teams directly to customers, getting them live, realizing value faster. It's very hands-on.
That is a strong commitment, a very direct way to ensure adoption happens and sticks. Okay, now, shifting gears slightly from AI within, say, IT or core operations. The earnings call also outlined a really ambitious vision for reimagining CRM, customer relationship management, and front office workflows. They believe the CRM opportunity for ServiceNow is massive, and they provocatively stated that agentic AI could render traditional CRM obsolete.
Bold claim.
Very bold. How exactly are they planning to do that? What does that reimagining actually look like?
Yeah, it raises the question, doesn't it? What does that look like in practice? Well, they're clearly moving away from the idea of the traditional static CRM screen we all know. They're focusing instead on dynamic sales and order management. Their recent acquisition of Logic AI, it's already driving explosive growth in CPQ, configure price quote.
CPQ. Automating quotes for complex stuff.
Exactly. Helps companies generate accurate configured quotes quickly. We heard they closed 9 CPQ deals in June alone, just from that acquisition.
9 in 1 month. That's quick integration.
Very. The vision is clear. It's not about a single monolithic CRM screen anymore. It's about omnipresent AI agents embedded in everyday tools, intelligently guiding sales processes, customer interactions, wherever they happen.
That really is a disruptive idea. Moving intelligence to where the work happens, not forcing work into a specific screen.
And they back this up with a ton of specific customer examples on the call, which is important, right? Shows it's not just theoretical. Widespread enterprise AI adoption across different industries, different functions.
Like who? Give us some examples.
Okay, so a major U.S. building supply company. They chose ServiceNow CPQ for configuration and quoting at scale, integrating it right into their existing workflows. ExxonMobil. They plan to implement ServiceNow's AI and agents for better employee experiences and operational processes across their huge organization.
Big names.
Big names. Standard Chartered Bank. They'll be using the AI Control Tower, integrating it with their own RaptorDB for enhanced data governance and security, critical for finance. Merck is adopting their AI platform for security operations, streamlining threat detection and response.
Okay.
The state of California is leveraging ServiceNow CRM across multiple departments, so government adoption too. Banco do Nordeste do Brazil is transforming customer service with ServiceNow AI. Intuit is expanding its relationship for cutting-edge agentic AI experiences for their employees.
Wow, the list just keeps going.
It does. Starbucks is using their AI capabilities to enhance its tech ecosystem, improving internal ops and customer-facing apps. And the North Carolina Department of Transportation will use the AI Control Tower to govern all their AI solutions across the agency.
It's really clear, isn't it? These aren't just niche applications. This is real-world adoption. Diverse sectors, critical functions. It proves the platform's versatility.
Definitely. And what's also fascinating are the strategic partnerships I mentioned.
Yeah.
Their collaboration with NVIDIA, for instance.
Right, the chip giant.
Yeah, specifically aimed at redefining employee support using intelligent AI agents, proactively resolving issues, delivering personalized help almost instantly. It just highlights how ServiceNow isn't building in a vacuum. They're embedding themselves within that broader, cutting-edge AI ecosystem, leveraging the best tech out there to boost their own platform.
Okay, let's touch on the financial and operational side for a moment. It's not just customers benefiting from AI, right? ServiceNow themselves are using it internally.
That's right. They're leveraging AI for significant internal benefits, and that's directly contributing to their impressive margin expansion. They're using their own now-on-now tools, things like code assist, code generation, to unlock significant capacity for their own engineers.
Eating their own dog food, so to speak.
Exactly. It reinforces their belief in the tech, and it gives them a real-world case study for clients. Look, this is what it did for us.
So this raises an interesting question, though, maybe for investors. If AI is driving all these efficiencies internally, why aren't we seeing even more margin expansion, pushing margins even higher?
Yeah, good question. The call clarified this pretty directly. They said while they project an impressive $100 million in headcount savings from AI in 2025.
$100 million, that's substantial.
It is. But the company is strategically reinvesting those gains. They're prioritizing investment in high-growth areas, hiring more quota-bearing sales reps, boosting R&D to speed up innovation, bringing in top-tier technical AI talent.
Ah, okay, so it's a choice. Growth over maximizing margin right now.
Yeah, exactly.
Yeah.
The goal isn't just to maximize short-term margins. It's to meet this exploding demand and make sure customers actually realize value quickly from these new AI solutions. You know, the cost of sale for AI isn't necessarily higher in itself, but it often involves deeper co-innovation with the customers to build out these powerful new use cases. So it's a strategic choice to fuel that future growth engine.
That makes a lot of sense. Fueling future growth, not just banking immediate profits. And quickly on the sales leadership front, they seem pretty confident.
Yeah, they expressed significant confidence in recent organizational changes. They cited the incoming leaders as proven executives, noted they have a deep bench of talent to drive execution. It suggests, a well-thought-out succession plan and strong internal capabilities ready to lead this ambitious AI agenda forward.
Okay, so what does this all mean for the future then? Let's turn to their guidance, their outlook. It paints a very confident picture for the rest of the fiscal year, doesn't it?
Certainly does.
For the full year 2025, they've raised their subscription revenues by a substantial $125 million at the midpoint. They're now targeting between $12.775 billion and $12.795 billion. That represents really robust 20% year-over-year growth, or 19.5% to 20% on a constant currency basis.
Yeah, and importantly, despite that aggressive growth target and the reinvestment we just talked about, they've maintained their full-year guidance for margins. Subscription gross margin still at 83.5%, operating margin at 30.5%, and free cash flow margin at 32%. So that shows real unwavering confidence in their ability to grow revenue aggressively and sustain strong profitability simultaneously.
That's impressive discipline. And looking specifically at Q3 2025.
For Q3, they expect subscription revenues between $3.260 billion and $3.265 billion. That implies 20% to 20.5% year-over-year growth, or 19.5% constant currency. Still very strong.
Okay. And their current RPO growth for Q3?
Projected at 18.5% year-over-year, or 18% constant currency.
Now, they did mention a headwind there, right? Something about renewal.
That's right. They noted a 200 basis point headwind, specifically because of a larger than average cohort of customers that renews in Q4. So it's just a timing thing, really. An important nuance, but likely temporary.
Got it. And Q3 operating margin also expected at 30.5%.
Correct. Now, connecting this to the bigger picture, it seems clear they're building in, a degree of prudence into this guidance, particularly regarding potential impacts from U.S. federal agencies. They noted tightening budgets, shifting demands in that sector.
Which we hear a lot about.
We do. Yet, despite that backdrop, the team still landed 6 new logos in Q2 just from the federal space, which I think speaks volumes about their resilience, even in tougher segments. And here's something critical. Their guidance does not include any contribution yet from the MoveWorks acquisition.
Ah, right. That hasn't closed yet.
Exactly. They expect it to close late in the second half of 2025, maybe early 2026. So that implies potential upside that isn't even factored into these already strong numbers.
Okay, so it really sounds like they are incredibly well positioned for the second half and looking beyond.
I think so. The company highlighted a very strong pipeline, over $1.2 billion in new opportunities created just from their Knowledge 2025 conference alone.
That's a massive pipeline boost from one event.
Huge. And this momentum puts them firmly on track, they believe, to reaching those ambitious 2026 targets. $15 billion plus in subscription revenue and a remarkable $1 billion in Now Assist ACV.
$1 billion just from Now Assist.
Just from Now Assist ACV by 2026. And a key takeaway here is their strong conviction. They said the demand environment for AI innovation remains wide open. What that signals to me is that customer wallets are very much open for this level of fundamental business transformation. This isn't just seen as incremental software spending. Enterprises recognize agentic AI as a potential game changer, and they seem willing to invest significantly to get those benefits.
All right, now it's time for our regular segment. This is not financial advice, where we offer up a truly outrageous but plausible trade idea based on what we've heard. What have you got for us today?
Okay, so my idea for you today is this. Initiate a long ServiceNow, short legacy CRM pair trade.
Long ServiceNow, short legacy CRM. Okay, interesting. What's the rationale?
The rationale is rooted deeply in what we just discussed from the earnings call itself. The company explicitly stated, didn't they, that agentic AI represents a seismic shift that could render traditional CRM obsolete.
They did. That bold claim.
Exactly. ServiceNow is actively reimagining CRM, moving away from those old screen-based interfaces towards omnipresent AI agents embedded in everyday tools. We're already seeing this start to bear fruit. That explosive growth in CPQ from the Logic AI acquisition, 9 deals in June alone, securing significant new CRM wins outside their traditional IT comfort zone.
Right.
Now look, legacy CRM players will undoubtedly try to adapt their own offerings. They'll add AI features. Of course they will. But ServiceNow's approach, platform-native, cross-functional AI and workflow, backed by massive enterprise customer adoption already, plus their AI control tower for managing all agents, not just their own. That, I think, uniquely positions them to capture this reimagined front office space.
So the idea is the market hasn't fully grasped this potential disruption yet.
That's the core of it. The market, in my view, hasn't fully priced in the potential obsolescence of older CRM paradigms in this new agentic AI world. This trade aims to capture the convergence, what they call the software industrial complex of the 21st century, consolidating into ServiceNow, moving fragmented legacy stacks onto their single, powerful AI operating system. That creates potentially a monumental future of value creation.
And what would be the catalysts to watch for this trade?
Potential catalysts are pretty clear, I think. Continued strong Now Assist and Plus AU adoption, especially spreading rapidly beyond IT into other business functions like sales, service, HR, finance. Major new logo wins specifically for their CRM and front office solutions, proving they can displace incumbents. And of course, the successful integration and accelerated expansion of Logic AI CPQ capabilities across their customer base.
Okay, that's certainly a bold idea and one that definitely resonates with the core message from the call about AI's transformative power in the enterprise. But remember, everyone, as always, this is not financial advice. We strongly, strongly encourage you to do your own independent research and due diligence before making any investment decisions. Seriously.
Well, you do.
So to quickly recap then, ServiceNow delivered a remarkably strong Q2. significantly beating expectations across revenue, CRPO, and margins. Performance clearly driven by robust AI adoption Now Assist, plus SKUs seeing impressive growth spreading beyond IT. They highlighted significant customer wins across diverse industries, presented that bold vision for reimagining workflows with agentic AI, particularly in areas like CRM. And their strong guidance for the rest of 2025, their clear trajectory towards those 2026 targets, it all reinforces their confidence.
Yeah, the core message here, I think, is that ServiceNow's unique position as this extensible AI operating system for the agentic enterprise. It isn't just about driving internal efficiencies for companies. It's about fundamentally catalyzing new business models, driving potentially unprecedented economic growth for their customers. And the demand environment for that level of AI innovation seems wide open right now.
Which leaves us with a final provocative thought for you, the listener, to consider. Think about your own organization's operations. What aspects could be fundamentally transformed by agentic AI? And maybe more importantly, what are the implications, both the opportunities and the risks, if you don't embrace this new UI, if you don't adapt to this potentially seismic shift?
Something to mull over.
Definitely. Thank you for joining us on TalkTickers. We hope this deep dive into ServiceNow's Q2 earnings call provided you with some valuable insights. Remember, always do your own due diligence, and we look forward to bringing you our next analysis soon.